Hey everyone, and welcome back to another episode of the Boutique Bookkeeper Show. Today we're going to be talking about a bookkeeping term called the chart of accounts, which is a super important part of having clean and easy to read financial statements. If you're already using a bookkeeping software like QuickBooks Online, you may have seen this phrase in your bookkeeping software somewhere, so maybe you're already a little familiar with it. But today we're going to be diving into what it is, why it matters, and how it's organized. So let's dive in. Hey there, and welcome to the Boutique Bookkeeper Show, where we take the mystery out of your money and make your numbers make sense. I'm Megan, virtual bookkeeper and bookkeeping coach, and I love helping female boutique owners just like you finally feel confident about the financial side of your business. If you're tired of feeling anxious every time you have to open QuickBooks, or if you're making sales but constantly left wondering, where did all that money go? You're in the right place. We'll cover all things bookkeeping and taxes, all in plain English, so you can be less intimidated by the numbers and finally start to use them to help you grow a profitable boutique. So, if you're ready to stop avoiding this whole numbers thing and start keeping more of the money you make, grab your coffee and your calculator and let's dive in. All right, so what is a chart of accounts? A chart of accounts is just a bookkeeping term that means a list of all of the different categories or groups that all of your money transactions are being grouped into. So the chart of accounts is essentially just a list of all of the different line items that you're going to see on your financial statements. So we're going to talk about how it's broken out in just a little bit, but just know that the chart of accounts is where you're going to go anytime that you want to make edits to how things are reflected on your financial statements. So why does this matter? If you really want to start taking control of your money and start understanding your financial reports, you obviously want to make sure that those reports are grouped in a way that are easy to understand. You actually understand what's going into all of those different line items on your financial reports, and that is where the chart of accounts comes in. So the bulk of this episode is going to be spent on how things are grouped together and understanding how to edit your chart of accounts, because that is going to be one of the setup items that you start doing anytime that you start using a bookkeeping software like QuickBooks Online. You want to make sure that your chart of accounts is set up in a customized way for your business. All right, so your chart of account is going to be grouped into 6 different sections, and we'll go into each of these in greater detail in just a minute, but the sections are going to be called your assets, your liabilities, equity, income, cost of goods sold, and expenses. These are going to be the 6 primary sections of your chart of accounts, and then there's going to be different accounts or categories under each of these different groupings. So first, let's look at assets. Assets are going to be all of the things your boutique owns. So oftentimes this includes money in your bank account, your checking account, your savings account. Maybe it's the physical cash that you have in your cash register if you have a brick and mortar business. It's going to be all of the funds that are kind of floating around in your payment processor payments. So maybe you carry a balance in your PayPal or a business Venmo. All of those are assets. That's money that your business owns. It's also going to include things like the inventory that you have on hand, right? That is an asset. That is something you own. It has monetary value. It should be reflected as an asset in your books. Maybe you actually own the building that your retail store is located in, right? A building is definitely an asset that has a lot of monetary value. That should be something that's reflected as a line item in your chart of accounts. It can also include other things like equipment or shelving and display materials. Oftentimes, in my own personal preference, if you paid over $2,500 for something that has a more long-term value, like you can use it year over year, things like that should be reflected as assets versus just recording it as an expense when the time you purchase. It really should be recorded as an asset. And finally, maybe sometimes you have furniture that you have in your store. Not furniture that you're reselling, but furniture that like your customers can be sitting on while they're waiting for their friends to try on clothing in your dressing rooms, things like that. Those will also be included as assets. And most of the time, assets are things that you can physically hold. You know, it's money, it's furniture, it's equipment. But overall, they are things that have a monetary value, but they can also include intangible things like maybe you have a trademark or a patent that your business holds. Those also have monetary values. The next group is going to be liabilities. So liabilities represent what your boutique owes. So it's money that you need to pay other people. So it could include credit card balances. So you owe the credit card companies, whatever balance you currently have on your credit cards. It can be loans or lines of credit that you owe to a bank or another lender. It also includes sales tax that you have collected from your customers that you will need to pay to the state later on. So those balances are liabilities. It can also be balance on a large purchase that maybe you financed through the vendor. So maybe when you actually bought the building that your store is located in, right, you had to take out a mortgage. That outstanding principal balance is a liability that you owe the bank or whoever you finance the purchase from. If your business owes money to someone, it should be reflected as a liability and there should be a line item for it on your chart of accounts. The third section is equity. So in simple terms, your equity is what I like to call the cash out value of your business. So if you take all of the assets, everything that you own, you pay off all of your liabilities, everything that you owe, your equity is kind of what's left over. It represents the owner's stake or investment in the business. And anytime you put personal money into the business, your equity increases. If you withdraw money for personal use, it decreases your equity. So we'll look at that a little greater detail when we look at the balance sheet of your business. But today we're just talking about the chart of accounts. So let's look at the line items that will show up as equity. So you will often see owner's contribution or owner's investment. That is you putting your own personal money into the business. You'll also see owner's draws. That's you taking personal money or taking money out of the business for personal use. So transferring money to your own personal checking account. Maybe you accidentally pay for something with the business card that should have been personal. Those are all owner's draws items, and that needs its own category in your chart of accounts. And finally, you'll also see retained earnings. This is something that's just a default. It will be pre-populated in your chart of accounts if you ever use a bookkeeping software and you can't edit it or delete it. But this represents the accumulated earnings from all prior years that has been withheld in your business. So you don't need to worry about that too much right now. But the fourth category that we are going to dive into is income. So this is the good stuff, right? This is all of the money flowing into your boutique from your sales, but it can be more detailed than that. So common accounts that are going to be in your income section are going to be your gross product sales. You're also going to reflect your discounts in this section and any returns. You can also include gift card sales, breaking that separate from your gross product sales. And really the great thing about bookkeeping is it can be as detailed or as general as you want. And one of the best and most helpful ways you can make it more detailed is to separate out your gross product sales into different divisions or departments of your store if you want. So instead of just having gross product sales, you can break it out further and you can have clothing sales, accessories sales, decor and gift sales, or even more specific, you can have it be shirt sales, bottom sales, outerwear sales, and so on, right? You get the point. Your financial statement should tell a story of where your money is coming from and where it's going to, and you have the ability to say how detailed that story is, okay? But I don't want you to get too carried away. If bookkeeping is totally new to you, just keep it simple and start with gross product sales. You can choose to break it out later on if you really want to, but honestly, most of the time you can get that information from your point of sale system anyway, so you don't necessarily need to break it out in your bookkeeping. All right, section number 5. Your cost of goods sold. So while your cost of goods sold, or COGS for short, COGS, COGS, is technically an expense, it is super important to keep your inventory costs separate from your everyday expenses so you can get an accurate view of your profit margins. So it's important to remember that when you purchase inventory, your inventory is an asset, right? We talked about that just a few minutes ago. And that asset becomes your cost of goods sold when you sell that inventory. So if you choose to break out your gross sales into different categories in your income section, like we talked about just a minute ago, having clothing sales, accessories sales, gift sales, I highly recommend that you use those same COGS categories in your cost of goods sold section. So it would be tops COGS, bottoms COGS, clothing COGS, accessories COGS, gift COGS, so on and so forth. Having the broken out sales in the income section matched to a broken out COGS in your cost of goods sold section. But again, if you're just starting out, keep it simple and have one cost of goods sold or COGS category in your chart of accounts for that. All right, the final section in your chart of accounts is your expense section. This will probably be the longest section in your cost of goods sold, and this is where a lot of your transactions are going to be categorized to, and it's all of the different expense buckets that your spending is going into. So having a detailed and industry-specific expense section will help you see where your money is going, and it'll help you make smarter financial decisions. So this expenses category is going to include things like your advertising and marketing, your bank service fees, your event expenses, office and store supplies, meals expense, your merchant processing fees, your rent expense, any software and apps that you use, payroll expenses, travel expenses, utilities. Again, this list can be as detailed or as generic as you want it to be. If you want to have different subcategories under advertising and marketing for Facebook ads and print ads, do it, okay? Think about the information that would be helpful for you to see and make those changes. And remember that all the changes that you make on your chart of accounts, these will flow onto your financial statements for you to see the summarized numbers there. The assets, liabilities, and equity are the accounts that show up on your balance sheet. Your income, cost of goods sold, and expenses show up on your P&L. So if all of this has seemed really overwhelming for you and you don't want to start setting up a chart of accounts from scratch, you are in luck because I have a free download for you that I have built over the last couple years in business working with independent retailers just like you. You can go ahead and grab your free download at findingfreedomfinancial.com/COA-template. I'll link to it in the show notes as well, but this is a boutique-specific chart of accounts template that is custom tailored to make your bookkeeping and financial reports so much easier to read and understand. Because any of you are already familiar with QuickBooks Online, when you first sign up, they have a chart of accounts template loaded in there, but it is way more complicated than any business owner really needs. So honestly, when I start working with a new client, if they have not been using QuickBooks, maybe they've just signed up and haven't done anything with it, the very first thing I do is I delete that chart of accounts that's already been pre-populated in there, and I upload this template that I have available for you today. That is all that I have for you today. We talked about what a chart of accounts is, why it's important, and how it is broken up and reflected. So again, if you need help setting up a custom chart of accounts for your business, go ahead and grab the free template that I have available for you, and I hope that it gives you a great start. Remember, setting up a clean and simple and industry-specific chart of accounts is going to be super important in having a clear and easy-to-use bookkeeping system and being able to understand your financial reports. So please go ahead and grab the free download that I have available for you. If you have any questions, feel free to reach out. Otherwise, I will see you again next time. Hey there, and thanks for hanging out with me today. I hope that I shared something that helped you feel just a little bit more confident in understanding all the numbers in your boutique business. If you found this helpful, don't forget to go and leave a rating and review on Apple Podcasts. That's the best way for other boutique owners just like you to find this podcast so I can help them feel just a little bit more confident in their numbers as well. If you have any questions about what you heard today, hop on over to Instagram and send me a DM at findingfreedomfinancial. I'll be back again real soon, but in the meantime, go implement or take action on something you learned today. I promise your future self will thank you.